Nidhi. Uh, Good evening, everyone. What a days! I think I know in the market when we talk about volatility, what we call volatility, what we call uncertainty, that has precisely happened in last 2 days. But what is the real learning out of this entire episode is you one should never expect a return from one event or something. The markets always deliver return basis. What is the overall trajectory of a country when it comes to the direction of a growth, or what is the capital allocation, what is the GDP growth happening, and ultimately what are the corporates delivering as a profitability. So I think this is what has happened. Everybody was expecting from the budget some big bang announcement, and this typically happens every year. But this year, when we looked at the budget, it was more a growth oriented, where it is talking about more of a fiscal consolidation. Government has continued to focusing on fiscal consolidation along with looking at revenue from the tax and nominal GDP growth rather than giving unrealistic number. I think that's what has happened in budget. I think we had another episode which Nidhi just mentioned what has happened to the trade deal, but I think we have Pratik with us, and he's a veteran in the industry. Pratik, what do you think has actually happened in the budget, and how the people have reacted on day one, second day it has changed because of trade deal. But can you just throw light more on what has actually real, points which has come out of budget?
Okay, so in the context of the markets, let us look at the flow of data over last calendar year to the budget. In the budget 2025-26, there was a cut in taxation. And the narrative which was there before that this is a period where growth is being led by capex changed to maybe consumption will drive growth. And that narrative became stronger when in September, October, we got a GST cut. So, but this budget has again put the train back on rails. So, just like 2002 to 2008 was the period when capex led growth, 2008 to 20 was the period when consumption led growth. Now it is pretty clear that capex will lead growth. So in the budget, if you look at a number, let me just put it up for you, which is capex. How is capex doing versus revenue expenditure? So this is how it moves. The earlier peak was 29.2, that has increased to 29.6. So, the budget itself focused on capex. In capex, yes, there are various things, but let me say it focused again on Make on India. So that is the big change that happened. Yes, then you can flesh it out, data centers, EMS, those spaces got a lot of money. But basic theme is again the focus has reverted back to Make in India.
Another good thing which we've seen, FM talking a lot about fiscal consolidation, and I think they are making, what India look attractive from the consideration that government is very keen for the growth and getting the confidence of the global investors. So, what do you
Yes.
see next 2 years, 3 years down the line?
So, we are one country in the world where fisc looks good. Our debt to GDP is just about 55%, and there is a roadmap that by 2031 we should be 50% plus minus 1%. That looks good. Globally, if the government maintains fiscal discipline, it increases the attractiveness of economy versus others. So on that count, we are doing very well. I think in the budget, either things were not changed or few spaces were provided more money. So either you had no change or you felt good. Is this is the kind of budget we had, ex of the increase in taxes on securities market. So STT moved up on options and futures, which frankly, was not liked. But uh, if if you look at it, whether it breaks the momentum or not, maybe it can be taken in this stride. So for something like an arbitrage, it impacts by 35, 36 pips. on a year for somebody who is doing offshore activity, actually, because they took out the GST on brokerage. For the outside investor, the impact is even lower. So I think this is manageable as yet, but I hope we don't keep increasing it more in the future. So, X of this one negative, I think the budget was either okay or better for most other sectors. If we look at financials, whichever spaces the budget is focusing on are lending opportunities for financials. In one narrow space of financials, the digital payments, there was this fear that UPI payouts may be stopped and all of that. They were continuing. So, there was a sigh of relief on that part as well.
No, I agree with you, especially on the security transaction tax, the STT, which is being talked about, there, which is the biggest negative in on all that. But such reactions are not unusual when market reacts. But in a long run, such things gets even out because it's not the cost as it looks like, but in a longer terms, it will be. So that's the view from our side. Also, when we look at that, I think another thing now when we're talking about India, and we are just you mentioned about lending and financial side, if we are talking about India growing as one of the fastest growing economy in the world,
Mm.
definitely a lot of things has to grow through financial sectors. So how can an investor can get a benefit out of that if we are looking at India being a country where we are talking about GDP is growing fastest, when we are talking about economy getting more organized, people savings habits are improving, then how it can give overall advantage to normal investor.
No, okay. Long story. Let me just try and make one point. Uh, if you invest in a evenly uh, valued financials, okay, since in every country you see debt to GDP creep up over a period of time, financials end up with better profit and earnings growth outcome versus economy as a whole. बहुत simple point है. Okay, every country you have seen debt to GDP move up as the size of the economy increases. If you get into a financial company lender at even valuations, na महंगा na सस्ता, so since your ability to lend more, grow faster than the economy is higher, unless you really do a bad job, your profit growth will be higher than the growth of everything in the economy, so more than the index, and people who are with you will have better outcomes. And hence, you see lot of people, if they're sitting afar and they want an exposure to a country, they start with financials. So this is one thought. So in a country which is fast growing, financials would always have that following. Now, over time, things have been changing. Okay, so there is lending. Now, what I say is true for lending, but now there is fee-based businesses, insurance, distributors, brokers, exchanges also, all of them have come about. And there, if you see the market cap addition, it is actually higher than lending itself. And for us growth investors who want to focus on spaces where growth in earnings is very high, we want to be located, focus on this part where growth is expected to be and has been way faster. So let me just showcase some slides to that. Okay, so this is the fund. Now look at it this way. We used to do work in a particular manner in the past. Banking one used to go to the branch. Actually, here it says laptop. Payments, you pull out your purse and do it. Investments was paper driven, physical, etc. And now everything is digital. And once you see the change, it also gives you as to why one part of the ecosystem is making more money versus the other, relatively speaking. And this is a table that shows that, lending has grown, no problem. 17.8 lakh crores to 69, 4x over 10 years. But non-lending, X of NBFCs, brokers, the AMCs, the exchanges have done much better. So we are growth investors. We want to be focused on spaces where growth in earnings is higher, and today it is the non-lenders. So this is a country which is changing from a country of savers to a country of investors. I think this is the thought you will find very strongly manifested in our product. So, when we launch this, so this is our BFSI fund. When we launch this, we think the timing is very good. Let me showcase to you something very interesting stuff. You know, ouch. Yeah. So this is a slide which shows you how markets have behaved over a year. So this is a 16-year data where you see Jan Feb is when the markets typically have not been nice. So I've shown Jan Feb, but the period is up to 15th of March, and then the rest of the year usually makes up for it. Okay, and it happened in 25 as well. January to March 15 was bad. You encountered various volatilities. Budget, end of the year, 15th of March is the advanced tax date. And then things change and people make money with 15 out of 16 years delivering a positive outcome. So in terms of timing, when this product has been brought in, is very good. And not to say that it has the tailwind of the deals. This has been a time of deals for this country. We have had a slew of deals with EU first amongst the major ones, followed by US. Last year was a bad year for us. Every other market did well. We did not. So there is valuation comfort. Relative valuations have improved. And when you do a deal, you give yourself access to two largest economic blocks globally, and suddenly it is a event which catches the eye of global investors. So, we were hoping that this happens. It happened, and you see the positivity come in. Rupee has appreciated. Yesterday numbers for FPI early days, but FPI numbers were strongly positive. Now, if this thing continues, it has to continue. We just say that chances are very good because we have now got a deal. Before this, every other country which did well after they got a deal with the US. And the deal that we have is amongst the better ones. It's of Korea, which may have got a 15%. Our 18% is lower than most other manufacturing countries. So we think we have got a decent deal. So for people who want to put up a manufacturing to service to the globe, I think we offer a very compelling advantage. So if we catch the eye and we get positive flows with the correction in valuation that we have seen over last 1 year, what it does for financials is lower down the cost of capital. Now, in the budget, while we focused on fiscal consolidation, 4.3% fiscal deficit, yet the gross borrowing number that came out spooked the markets, thinking yields will move up, and the budget day the financials were lower. But when you get a deal and you think money will come in, the opposite happens. Liquidity increases, yields move down. So yesterday, to my reckoning, yields moved down by 3 bips, and the performance of financials were very different. So I think great timing for the product. People have a lot of money on the sidelines. They were waiting for a big event to catalyze investments. That has happened. Growth investing, which was out of focus for long, I think with lower interest rates, with expansion of money supply, should again come back into focus. Economic growth should hence sustain. Like I said before, financials typically do same as better than economic growth, depending on start valuations. So it's a pretty good combo. If we have to hunt for growth, we think it will be there more in capital market ecosystem plays rather than lenders. So that slant you will have in the portfolio.
So basically, what you're saying, financial services forms the backbone that enables the entire process. And more importantly, financial services today extend far beyond traditional banking. What you said, it is more of a laptop rather than going to a normal bank branch. This includes lending, insurance, capital market, asset management. And that's what we have seen in India, the way stocks have been doing, the way these companies have been growing here, and there are more and more players coming into the market. So I think if we look at, if I have to summarize it, its financial services are not beneficiaries of growth. I think they are enablers to growth also, and that is why they will grow. And somebody should look at investing in this kind of a fund.
Absolutely.
And I think very important from our side also. Again, when we look at this is a theme which we are looking at as a financial services, but more importantly, when we are looking at an asset allocation, ideally one should look at not more than 5 to 10%, but definitely somebody who wants to participate in growth story of India can definitely look at a financial services fund, because to the extent of 5 to 10% of the portfolio, and that is where there is a chances, if everything goes right, then one can get a better return out of these funds.
Yeah. So one other key differentiator that our house brings, apart from growth and earnings focus, is a focused high conviction portfolio. So this is a thematic. Thematics are not very long portfolios, but in our house, everything that we do is between 20 and 35 names, and you should expect this fund to be also around 25 names. So high conviction, 3 to 4% kind of holdings in a name is what one should expect in terms of portfolio construct, which would again differentiate it with what we generally have in the marketplace.
That's normally to the Motilal Oswal asset
Yeah, that is
management
our style of
style
investing.
of investment.
Yes.
You were just talking about the trade deal, and I think that's the most talked about things in the market today. I know I'm just coming from financial service to the trade deal because maybe many people would want to hear more about that. So I think we, as you mentioned, that we have back to back two trade deal. One is European Union and another is US. But I think when it happened, the US deal, the market made merry out of it. Everybody started looking at India in perspective. So what do we, is it export led growth, or is it India as a financial hub becoming more and more prominent, which will come out over a period of a time, according to
You see, the fact that we will get a trade deal was known. We are the fourth largest economy of the world, growing fastest. We account for 17% of world economic growth. We are a democracy. The counterparty is world's largest economy. They are a democracy. So there is a lot of common stuff between two of us, and it was more a question of when rather than would it happen. And it has happened. Now the details will come out. Let's see. But even when it had not happened, very few spaces were getting impacted negatively. So, X of gems and jewelry, clothing, and let's say shrimps, very little was getting impacted. Electronics was zero duty, pharmaceuticals was zero duty, etc., etc. But there was a fear. It was almost like we are nice people, we are friends. Why are we doing this to each other? Or they doing it to us? Now, because of that, the global money was looking at countries which had a deal. So the messaging is these guys are on the right side of US. This guy is probably not on the right side of US. Now, when we have the deal, that confusion in the marketplace is over. Okay, and spaces which were getting impacted negatively now actually have two large markets open up for them. We did not have a deal, and two of our high value addition spaces were suffering, may have caused a higher degree of currency depreciation than otherwise. We have a deal. government is able to make sure that people employed in these spaces do fine. I think we do see some amount of appreciation in the currency. Now think of it, you are an outside investor. You're looking at a country which is seeing a depreciation constantly, and that happened from November, December to January period. We had an on and off very high volatility. How do you invest? So think of it, there are asset allocators who will put money and forget about it. So small. But the guys who are performance seeking are the hedge funds, for example, and they are levered and in foreign exchange. So those guys get slaughtered if rupee depreciates. They need stability of the currency and a view that it will stay stable on its own. Right now, I think what a deal does is to first ensure the depreciation breaks, and there is a great chance of stability. So the guys who are sitting abroad and trying to find spaces which can do very well start their activity. I think which is why you see the breadth of the market, which was very narrow, suddenly expanding. So this has been the thought we have been sharing and sharing for several months, which has been back for our house, the fund management house. We were saying that just have a period when rupee stabilizes, then we'll run out of excuses. फिर कुछ excuse नहीं बचेगा. The last one that we thought we want is a deal which will force people to have a look at the country. So this is what it is. It's all there. There are people with money on the sidelines. Great time to invest. Our product, financials, is a very good product, focused, high conviction, growth oriented, like everything else that we do. So only other piece of volatility that we see, and it happens every year, is that March 15 period, 5th to 15 period. uh, be prepared for that. But otherwise, I think we have a very good construct. In fact, when I used to do a webinar before the deal, I used to say, use this period to your advantage. Very high chances of a good outcome, 15 out of 16 years, if you had invested in Jan to March period. The rest of the year gave you solid returns. Yeah. Uh, so do a sip for this period, but if you get a deal, prepone it. Now you've got the deal. So the message is to prepone it and not be on the sidelines. So in terms of what all we have got, you got a tax cut last year, you got a GST cut, you got 1.25% cut from RBI, you got liquidity expansion, you got a cut from US. Crude is weak. माने मांगने को ज्यादा बचा नहीं है.
Actually, it's more than what you can expect.
Yes, and all happening at the same time, and you have a market which is the worst performing market globally. So valuations have also corrected. Quarter two numbers were the first quarter when you saw analysts, not cutting estimates, let's say. Quarter three has again gone quite well. In quarter three, while large caps had done what they do, 7-8% growth, mids and smalls have done vastly better in terms of earnings growth. That also feeds into the breadth of the market moving up. So I think good times as you go forward. Quarter four, first quarter would have the low base of last year. I think this cheer should continue for some time.
Okay. I think that agree with you. I think a lot of things positive things has happened just now, as you said, and I think that should give. So when we talk to investors, also we also believe, and another major point I wanted to talk about is asset allocation. Typically, what has happened of late, a lot of people talk about gold, silver, what has happened in the market. And a lot of people say they have missed the rally and all that. But if somebody would have stuck to his asset allocation, he would have participated not only equity, commodity, and debt also, because that is how a person should get return. Even if one market, if one asset is not performing, the other performs, and overall returns turn out to be risk-adjusted returns turns out to be better. So we would want all our investors to ensure that they stick to their asset allocation. And when we talk about like financial services fund also, it should be close to not more than 5 to 10% of their overall portfolio, because again it's a thematic. But this kind of a fund sometimes when you participate can give you a delta over the other asset class, because this is a thematic. And when we are talking about India, which is on the growth phase, and looking at the GDP growth along with all the positives, if equity gives better return, financials will definitely gain out of it.
Yes.
So that's what we suggest.
Absolutely same thoughts. Thank you so much.
And you want okay, I think the fund is closing on 10th Feb. I think that's important. So those who want to participate should participate ASAP. That's
Thank you.
thank you.
So we have a few questions offline that had come to us. Would you like to take them?
Yes.
All right. Let's take them. Okay. So there has been a lot of talk on the STT hike, right, that took place on the budget. So what is your view or your sense on how it will impact this theme that your fund is, giving and investors to participate in?
Yeah. No, so we touched upon this. STT increases the friction. So for people who trade in the market, the break even for doing Nifty futures buy and sell is probably now closer to $40 versus closer to $20 earlier. So there is a delta that has happened. Now the delta would be like 0.12%. So in a trending market, if the direction of the market changes, it does not matter much. But if the market is sideways, the friction would hurt and you would see volumes go down. Okay, so that is one. Now, we don't think what happened to options impacts volumes too much. Uh, and for foreigners who account for a very substantial part of overall volumes, they got a GST cut. So for them, the impact has been lower for domestics versus domestics. So net all, considering everything, we think it is something that people will take in their stride. What a future guy or an option guy really is looking for is leverage. Okay, increase in STT does not impact the leveraging capability. So, people will smart for some time, but if the market gains direction, people will come back, is what our sense is. Uh, it does not affect the fundamentals of lenders at all. Okay. Of the capital marketplace, uh, for the online brokers, for example, HFTs who will get impacted more or less there and so on. So we think the overall impact is quite manageable. The drop in stock prices that happened on that day uh, was by most reckoning more than the damage to fundamentals, and that presented an opportunity, and we see them bounce back also. So that is the thought.
What's your thought on deposit mobilization in banks? Do you think that the nervousness around that will sustain going forward?
Yes, our thought is that it shall stay. It is getting more and more difficult to get deposits. We as a country are changing character from being country of savers to a country of investors. Now that is not necessarily bad for banks because when you invest, think of it, instead of putting money in a fixed deposit where the bank has to pay you 6+%, let's say, just taking a round number. If you invest, your money goes into savings bank deposit where you get 2.75 or lower. Okay, so it actually lowers down the cost of funds for the banks. There is this wrong thought that that buying shares so money is going out of bank. No, it is just going from one account to the other. It stays in the bank, very stable source of money. Okay, and lower cost. So it
The net
actually
interest margins go down.
net interest margin goes up because the cost of money is going down. Yes, yes.
Yeah. All right. So there is a participant who says, I already own some bank stocks. Would this fund still add value?
So every guy to himself. We see things differently. So I would urge the guys to look at our house, what all we own as a house. he will find that we are a strange house which has hardly got any exposure to, let's say, large banks. Okay, because large banks, you know, are growing just about economy, 10, 11, 12% kind of growth. That is good to preserve monies, but not result in great outcomes from investing. We are more with few NBFCs, we are more with few medium-sized banks. Okay, and we are very heavy on capital market players. So, and capital market plays, if you look at us, we are a equity house. So we do believe we have an edge there. So hopefully we do a better job on that side. So that again is something that we bring to the population at large.
I think what Pratik is saying, just trying to, in one word, if I say that's only bank. When we talk about financial services fund, it is more about asset management, capital growth, lenders,
Insurance.
entire area of the financial services, insurance companies, everything comes into picture.
Yeah.
So I think when somebody is looking at comparing banks versus financial services, this is not the right comparison. That's what it
So
is.
I also showed you a slide where the lenders' market cap has grown very nicely over 10 years for something times, but the market cap of X of lenders BFSI play has grown even faster. So, and it's all propelled by earnings growth. So that is how it is.
So someone coming in today, would you expect them to do a SIP in this, or do you expect them to do a lump sum today? Because the valuations, as you said, look reasonable. So how do you expect someone to
So,
participate?
yeah, I tried to answer it. I showed you that slide where this is a good period to invest in a year, 15 out of 16 years, it has been good. Okay. And I've been saying before the deal, spread your investments with or without deal from now to March 15th. If you get a deal, do it now. Don't ask questions. So you got a deal, say put it now. The only other bout of volatility that happens in this period is March, 8, 10 to 15th. So maybe a good strategy would be 50% now, 50% then.
Right. Okay. Uh, anyone coming in, what kind of time horizon should he or she keep in mind?
Yeah. So in equities, you should be long term. Okay, point one. Now, the second question is what is long term? Okay, now in equities, we say markets follow earnings growth. Sometimes earnings growth is ahead, sometimes markets are ahead. Okay, when we say long term, and most people define 3 to 5 years as long term, it basically gives a very good chance of a period happening in this 4 5 year period when markets move ahead of earnings growth. Okay, so you come in when, so today somebody who is coming in when earnings growth are ahead of the market. If in 2 years you get a good market and markets go ahead of earnings growth, say thank you. Like you said, do asset allocation. Automatically, your equity as a part of asset allocation would have moved up. You will take profits away. Just like today, I believe if somebody had invested in gold and silver, the part would have moved up and you should take some money off the table. Today it is easy. We are the worst performing asset class.
But that's the part and parcel of the
Opportunity.
that's an opportunity and part and parcel of a game. Like he said, sometimes you're ahead of the market, sometimes you're behind the market. But I think when he's saying set allocation is important, but somebody looking at equity, definitely 5 years should be the ideal horizon minimum. Why we say that? Because market can react, and the longer the term, we all have seen the study, the lesser the chances of negative return. And when it goes beyond 5 years, there's hardly any negative chances of getting return, negative return. So equity somebody is looking at should not go if it is less than 5 year money for sure.
All right, I think we'll wrap it up here. If you have any parting comments or closing comments for all our audience that is joined online, so that'll be helpful.
No, so one last comment from me, is there is a lot in the price. We have seen a very difficult period over past 3 4 months. Several positive things have happened. A lot of initiatives by government of India. You got a GST cut. The business tightening which happened has been loosened to spur growth. You got a budget which takes up that irritant is otherwise okay. You got two trade deals all happening over last 5 6 months, and you have a market which is down. It's a great combo. भगवान से और ज्यादा मत मांगो काफी कुछ मिल गया है take faith and come into the market. We do understand there is a lot of money on the sidelines. It is showing in numbers. My sense is great time to put some of that into work.
And what he said, I just wanted to say what has happened in last 2 3 days actually. When we looked at budget, people looked at a gloomy budget because of the STT and all that. And next 2 3 days, next couple of days, it's like a boom, trade deal boom, and we reacted. So what it is telling us is in a short term, market can react both ways. I think one has to look at what is actual data behind it. One should not look at a point to point data. One should look at a long term performance of the companies, GDP, and what is the intent of the government. So somebody is looking at that, should wait for a longer time and invest with a lot of information rather than just on the basis of information. That's what I want to say. Thank you.
All right.
Thank you.
Thank you so much. Thank you.
Thank you.
Chalo ji, thank you.
Thank you.